Hi, this is Amir with the Bulletin Board Heroes here at Zacks Traders Cafe for Wednesday the 23rd of August. Starting off with the FTSE 100, which seems to be fully aware of that uptrend line there from back in November, 72.70. We've bounced off that in the last three sessions. Still waiting for the market to at least drift up to the early July support there around 7,400 as a minimum on the upside, and then maybe up to the 50-day line over the next 2 or 3 weeks, which is currently around 7,500. The plus points here, apart from bouncing off that November line, are the bullish divergence. So we had a slightly lower low there for August versus the July low, and also the way that so far this looks like a major neckline support there around that 72.70 area. Onto the DAX, where we're still trying to keep the dream alive of the market remaining in an uptrend. I suppose one could argue that that line there, which was broken, is actually there, so we'll see how that maps out, but at least we have bounced above the 200-day moving average and basically retested July support for August, which is helpful. Gap close buy signal to start the week, so we closed that gap down that we had at the end of last week to start this week. Initial target here is 16,000 at the 50-day line. Above that, then obviously looking for the peak at the end of last month, around 16,400. This stage only back below the 200-day line, 15,400 on an end-of-day close basis would really suggest that we actually are rolling over, and that the July-August lows have just been tasters ahead of a proper rollover for the market. Moving on to the Dow, and here equally fraught over the recent past, trying to work out whether we are actually going to head back down towards the floor of that rising trend channel from back in August last year. That's around the 34,000 mark, and then the 200-day line 33,700. Ideally, this market will copy the DAX and bounce above the 200-day line, and maybe just find the support near that uptrend line from the end of last year at 34,000. End of day close above the 50-day moving average, 34,650, would be the first proper momentum trigger on the upside. Otherwise, we are just hoping that this falling knife will not fall any further. The situation of Bitcoin is next, and here you can see that even though this market is still very oversold, it hasn't been able to get any positive traction, which is slightly worrying, it has to be said. The RSI at 20, so normally there'd be a little bit of a bounce, say in this case back up to the 200-day line, and then we could fall back from the very oversold area. The support there from June, 24,800, so that's the logical place for this market to go. An end-of-day close above the 200-day line, the first, let's say, safe trigger for a move back up towards 30,000 plus. Onto the stocks, and quite a few here that have done well after the charting call. First one is Artemis, where we had the gap to the upside at the end of, well, the beginning of this month actually. Now we've had a gap through the 50 and 200-day moving averages. Initial target here was around a penny. Above a penny, we were looking for 1.45, which is the upper parallel resistance line from February. And hopefully we'll get that as soon as the end of next month, or even sooner. Ideally, we stay above that 1 point, well, basically a penny would do the trick. Moving on to Ajax, which is finally stirring after a long period of not doing very much. Here it looks as though we're breaking out of this falling wedge that's been in place since November, with the break of the 6 pence level, so above 6 pence, looking for up to 11 pence at the top of that broadening triangle from back in March. Maybe we get that by the end of next month. The other reason for including the stock today is the bullish divergence. So we had lower lows for August, but a higher RSI trace, and therefore that should hopefully provide some decent momentum, along with the way that the 200-day line at 8.7 pence is still rising. Onto a stock which has delivered a decent signal, which is basically a bear trap island reversal, or at least an unfilled gap to the upside, whichever way you want to look at it, above a rising 50-day moving average. So that suggests 3.3 pence at the top of that triangle from February is in the bag, as we're obviously not too far away from that. Next target by the end of next month up to 3.8 pence, which is the broader triangle from last October. And we are feeling bullish about Ariana while it's above 2.5 pence and that rising 50-day line. The rally started with bullish divergence as well, so the July bear trap, but the July bullish divergence coming in there to help the shares to turn around. On to ARC, which came up with a good performance yesterday, and we were wanting or wishing that this market would return to its previous range, which was between, let's say, 2.9 and 4.6, and so far we've done that. The view is at the moment that while we're above that 50-day line around 2.75 pence, we could head back up towards 4.5 pence as soon as the end of next month, which would be quite exciting for holders who've had to suffer that bear trap below 3 pence over the course of July and August. On to one of the best charting situations of the recent past, the best on the basis that it has actually done everything that we wanted it to do. Beacon Energy, unfilled gap to the upside, initial target was 0.14, the next target was 0.17, and the final, if we get really lucky, target was 0.24, which was hit today, right on the nose, so that's pretty good. I'm not going to raise the target any further, but at least while we're above 0.18, and the old target looking for 0.24 to be revisited, at least over the near term, maybe the next week or two, something like that. On to Bradda, which delivered an RNS today. Here we've had bullish divergence, falling wedge break, and now a gap, well, at least towards the 50-day moving average. The view is that while we're above the previous support there for the shares around 3.75 pence, looking for a target here as high as 5.5 pence at the top of that triangle from May as soon as the end of next month. Moving along to Blackbird, which is still, I suppose, in recovery mode. You can see that we had the big rally in July after a sort of bear trap reversal. Hit, 14, 15 pence. Having another go now above a rising 50-day line above that at 8.25 pence. We're looking for a retest of the 14 pence area, hopefully by the end of next month, or maybe even sooner. Best case scenario over the next 1 to 2 months, while we hold above that, the 50-day line is up to 20 pence. So let's see if Blackbird can deliver. Nice to see Canadian overseas pushing higher sort of on a slow basis this time, which is probably arguably better. Here we've got a rising 50-day line, we've got a V-shaped bull flag, and we're looking for an end-of-day close back above the initial August resistance of 4.5 pence. If we can get that, then we're looking for 6 pence over the following 2 to 4 weeks, or even sooner. 6 pence probably seems like heaven compared to where the shares have been even last month, below 1.5. And obviously the rally here started with that bear trap gap reversal and bullish divergence, and it was flagged at the time in an encouraging way. A stock which has not been very encouraging in the recent past is Eurasia, but we still have a look at it just in case something exciting might finally happen. Obviously we've been in the doldrums for the best part of a year here. Possible rising trend channel base, need a breakthrough now. I suppose the recent resistance is around 3.4 pence. Above that, looking for up to 4.25. But at least at 4.25, it would suggest a turnaround has finally broken the bear trend that we've had for so long. One of the highlights of the day is Graft polymer, which has followed on its charting promise that we highlighted last month with the bullish divergence, and hit the target. Well, the target there was that resistance line there from May, so we've hit that now around the 3 pence level. Looking for an end of day close through 3 pence to deliver a potential move up to 7 pence as soon as the end of next month. So let's see if Graft can finally turn around. It is key that we break that line of resistance there at 3 pence. Obviously we've had a little poke through it first thing today. On to Hummingbird, where at least the first part of the recovery is starting to take place. We were looking for, well, we identified the bounce off a rising 200-day line bullish divergence last week, and we were looking for 14 pence initially. That resistance line now down to around 13.5. End of day close above 13.5, or a weekly close above 13.5 could unleash a new leg to the upside as high as 23 pence by the end of next month, but we need that 10 pence zone to remain firmly in place. Moving along to a stock that I covered yesterday, but didn't actually name it properly. It's Inteliqo, and basically here there was the rather strange-looking chart with the vertical move and the possible top of price channel target there as high as 27 pence by the end of next month, while we remain above that gap floor there at 10.5. So some Aquis traders may find that situation attractive. On to Jadestone, which I haven't looked at for ages. Here we've got a potential W-shaped reversal. We've got a bullish divergence line there, which has been in place since May. And the initial target here up to 34 pence, especially if we can get an end-of-day close above the bottom of the gap there last month, and also the neckline resistance from earlier this month. So an end-of-day close through 27 pence could give us 34 pence and also signal that the shares are turning around for good. Finishing off with Orca, which seems to be down to its last 95 grand, which is perhaps a little bit precarious, but at least looking at the chart, it's almost behaving as if there's going to be a good scenario coming out here. We've had a sideways shuffle along a rising 50-day line, which is normally a good sign, and that suggests that at least while we're above 2.7 pence, we could head up to the resistance line projection there from June as high as 5.5 pence. Difficult to work out what sort of scenario or news would deliver that, but that's where we are at the moment. You can see obviously earlier in the month there was a full storm rally. Let's see if there's another rally on that situation. That's it for me today. More updates tomorrow.